right, I guess it's recording right now.
Awesome.
Okay, hello everyone. We're gonna go over some stock fundamentals today. Also, I had some people ask me if I can go over um, the key levels of the volume profile, anchor revap, stuff like that. We'll go over those later, but the main purpose of the session today is the stock fundamentals. I have made a list so you can just put them in the scanner and find them. Um, the list is very precise. So if you put in all these metrics, you might not find so many stocks. You might not even find like more than one or two. So you have to play around with it and then go read the financial statements of the companies and stuff to find the best company you want to invest in. So the first thing you want to do is find a stock screener. So we have many different stock screeners. We have the paid ones, like you can pay Bloomberg. That's one of the best screeners you can find. You can do MarketSmith. They have a really good screener too. It's one of the best scans I personally like. You can do Finviz, which is free. Um, so there's many stock screeners. You can do VectorVest, and they do everything for you. But the most important thing is putting the metrics and the metrics what you're looking for. I mean, even Thinkorswim has screeners for fundamentals. So the first thing, find the screener you like. Then you're gonna look into what kind of company you're gonna look at. So, for example, we have different companies. We have the small cap, we have the mid cap, and then we have the large cap companies. Um, you don't want to really invest in the small cap companies because since the capital is low, the shares outstanding are low as well, and then you don't really have a lot of control on your stock shares, so they can move, somebody can move them, like somebody can have control over your that company that you want to have an ownership of the stocks. So I personally like to look at mid cap and large cap companies. You know a lot of large cap companies like Microsoft, like Apple, the large cap companies, and large cap companies are the companies with more than 10 billion shares. And mid cap companies that we can look at today are the companies between that they have shares between 2 billion to 10 billion. The market cap is between 2 billion and 10 billion. And then you have different metrics to look at in the financials and the fundamentals. So we have the cash flow. You want the positive free cash. That is the ideal. I mean, you don't have to set that as a metric, but you want the free cash flow to be positive. Um, one These three things, I would say these four things are one of the most important things that you need to put in your scanner. The rate of equity, rate of investment, and rate of asset. These three things for me are the most important things. Again, if you put them all in, you are really tightening your the list of your stocks that you're going to look at. But again, if you're looking into investment, you want to have the safest stock that you're putting your money in the long term. And remember, even if you're a trader and you're not an investor, you want to look at companies that if your technicals don't go the right way. For example, let's say you're a long-term trader or like a swing trader, um, and you want to leave your money over the week and make money. You want to look at the companies that you can trust, and they're more on the safer side. So even if your technicals aren't working, the fundamentals are going to be on your side. So if you're buying up a company, and we're pretty much are looking on the buy side. We're talking we're talking about the long term. Ben, I'm gonna mute you too. So we're gonna go. We're talking on the long part of the trade or investment or buying pretty much. So one second, sorry. Okay. So we're talking about the buy side. If you're an investor, you're obviously not going to short something. You're not investing to short something. So we're talking about the long side or buying side. So if you're buying something, you want to put your money in a stock or a company that you feel comfortable putting your money into. So we have the rate of equity. Again, if now I'm not going to go over what rate of equity means, rate of investment mean. These are the things that you can, like, I can send you this file that I made, this word file that I made, and you can go and research what everything means. But I'm pretty much helping you so you can build the scanner for yourself and find out the companies that you like, read into the financial statements, and put your money in those companies. If you're trying to invest, if you're trying to make yourself a scanner to only focus on companies, like even if you're trading, focus on companies that you can trust going long on. So we have the rate of equity. It's ideal to look at the 15%, the rate of equity be more than 15%, but even 10% is fine. You want the rate of investment be higher than 10%. You want the price per book value be less than 1.5 or 1, but 1 is better. But again, when you are trying to find the most ideal stock, you're not gonna find more than one or two company. So again, like if you want to like make it a little bit, like give it a little bit of room, you go with 1.5. Then you're gonna look at the earnings per share, one of the most important things. So these three things, and then this thing, earnings per share growth. In the past 5 years, you want it to be 20% or greater. Then you're gonna look into the dividends. You're gonna read the balance sheets, okay? And then you want the ratio of 2 or higher, all right? So that's the first step. The first step, find your screener, put these metrics in. I'll send you this file. You look into everything, and then you're gonna start actually reading into the company. Again, if you're an investor, you have to put in work. You cannot just be like, all right, I'm just gonna put my money in Apple. Why are you putting your money in Apple? Is it meeting these fundamentals? Yes or no? So the most important thing is that first, if you're investing, look into fundamentals. Our fundamentals are on your side. Then go to technicals, and then find the best entry. If you're an investor, you want to pull back in the price of the stock to put your money in. Okay. Then you're gonna look at the company's metrics. So you're gonna read into 10K files from the past 3 years, the letter to shareholders, the break even of the business segments. And look, I'm going over everything quick because like I apologize, I have stuff to do, but I'm gonna go over everything quick. You guys can ask me questions. I'll go over any question that you have. I'll go over the technicals that we talked about. But so like I'm gonna go over every step, and then you can ask me questions. So then you're gonna look at the breakdown of the business. So what is the business? What sector is it? What industry is it? Okay. And we're pretty much focusing on U.S. stocks. Personally, I like to focus on U.S. stocks because I'm familiar with um, U.S. market. So I'm not comfortable with putting money like in the long term in most like Chinese stocks or Asian stocks, because when you look at the U.S. market in the past whatever years since 1980s, the market will always is biased always to the upside. Okay. So you look at the revenue growth, the margin goals. Sorry. Um, you look at the buyback. Are they buying back shares? Are the companies buying back shares? Are they raising dividends? Of course, if you're an investor, you care about the dividend. You want that extra payment every quarter on to be on your side. Okay. Who is in the competition? What's the sector? Okay, what are the segments? Okay, so for example, like you're looking to energy sector. Who are your competitions? So remember, if you're an investor in a company, don't look at it like, hey, I'm trying to make money. That's not the goal. That is the ultimate goal. But when you're investing in a company, you imagine you're trying to own something. You're buying something. Okay, you have part ownership in that company. If you're buying Microsoft and you're looking to own it in the long term, you are you're looking to be a part ownership in that company. You have to like that company at first. Like, do you like the company? If you're putting your money into Tesla, do you like the company? Now, a lot of some companies like Tesla, people like the CEO. I mean, they like, I know people. I have friends that they invest thousands of dollars into Tesla just because they like Elon. Now, is that a right mindset of investment? No, it's not. Again, you have to look at the fundamentals. Okay, do you are ever is everything? So a lot of people say Tesla is not a good investment because they are going over fundamentals. The fundamentals of the company is not good. Okay, so you want to have ownership of the company that you actually like, but also you want that company's you want a company that you know it's doing good, right? So you want the earnings per share to be growing every year. Now, if you go sign ups to some good investment tools like MarketSmith, you can actually, or like VectorVest, both of them I really like. You can actually see every one of these metrics, the graph of them. You can see the rate of equity. You can see earnings per share graph, and then you see like what companies are actually. So for example, like Tesla in the past few years, their earnings per share growth was actually going down, but now it's actually it has started going up. So now people are more interested in. Give me 1 second. All right. So let me unmute Ben. I think he. 1 second. Ben, is there anything?
Well, for me, this conference, this presentation is specifically designed for long-term investing, correct? When you
Yes.
look at fundamentals.
Mm-hmm.
So for me personally, when I do my long-term investing, I kind of look around everything that's around me, and I try to think of companies that directly influence or affect my daily lives. I'm a marketing guy and I'm a tech guy. So most of my holdings are tech companies. And this one time I went to a nearby restaurant around my house, and it's called Wingstop. At that time it was like around $45-$50. And I was like, oh man, there's a lot of people here. Let me see if this is a public company. And so I did a quick search, and yes, it is a publicly traded company. And so knowing that there's a lot of people there every single day, I know they're doing good. So I started looking into it. I started researching more about the company, and I decided to invest in it. And that at that time, I didn't buy stocks. I bought options,
Mm.
and that made me like $1,000 in a week. Just, but that's not really the right strategy to do. You just can't go to a restaurant, seeing there's a lot of people, and then start buying calls in it. But what I'm saying is that look around you and see what companies are directly impacting you. For example, now that I'm still a college student, and 2 years ago, my university, everyone was started to using Zoom, and all the professors, everyone is like, okay, let's go on Zoom meetings and stay home, study online. So I'm wondering, okay, Zoom has a lot of potential, and at that time, I don't think Zoom was a publicly traded company yet. But as the result of them impacting university students and them going public, I think that has to do that, like, it's pretty good. So I bought Zoom shares, and look at the pandemic right now. Everyone's on Zoom. So part of fundamentals is to look around you and see if there's any publicly traded company that have a positive impact in your life, and use that as a starting point to do fundamental analysis. And tech stocks, for techs, I like Microsoft. They just bought GitHub. That's like a coding platform, I think. Um, Roku, everyone's using Roku in their house. What else? Apple, obviously. I'm a big Apple fan. Um, and then shares and ETFs that has like mostly like holdings in tech stocks. But yeah, fundamentals is not too hard to do, especially if it's long term. And like you said, for the past years, like 10, 20 years, if you see the trend in the US stocks, especially tech, every pullback's being bought. So if you could find a good basket of stocks, try looking for that pullback and invest in those companies.
Yeah, I totally agree. He's right. So you want the companies that, again, that you're familiar with, or if you're not
Right, familiar with, yes.
um,
And one rule that I have for myself is if somebody suggests me a stock and I don't know it right away or it doesn't sound familiar to me, I'm just gonna pass.
yeah, or you can, what you can do is actually read into the company, you know?
Right, sure, yeah. If
You don't know about the company, but you read into it and you're like, so for example, let's say, I don't know, let's say you have no idea what Alibaba is. So read into it. Maybe it interests you, you know?
mhm.
Would it affect you? I mean, yeah, it kind of does affect you, Alibaba. Like, I mean, a lot of people, I was saying it the other day, a lot of people, a lot of sellers on Amazon are actually buying from Alibaba and selling on Amazon. So you have, maybe some stuff affects you not directly but indirectly. If you're buying off Amazon, then you know Amazon. If you are not buying Amazon, let's say if you're not buying Amazon, you're not trying to invest in Amazon. Who's Amazon's competition? You have different companies that compete with Amazon. But again, what are the companies that affects you? And he's totally right. But are those companies are growing?
That's true.
You know,
One more.
are they growing? Are they and one of the most important things to me personally is that company innovative? Are they growing in terms of like, so in the future, are they bringing are they coming up with different things, or they're just stagnant and they haven't really done anything new, you know? So for example, let's say Ford.
What is the industry like a cap? I mean, how much is room for the growth? For example, Beyond Meat, right? Example that has a lot of growth in the sector. Like it's really new. So those are like growth sectors. That is also other important thing we need to consider.
Yeah, exactly. So are they growing in long term? Are they coming up with new things? Another thing I look at in terms of investment is that what do you see in the future? So for example, right now with the whole coronavirus thing. So what do you see happening in the future? Personally, what I see happening in the future is huge growth in two things. One, tech. So why do you think tech is going to grow? Because we have different things, like you can look at why tech is going to grow in different sectors. I would say why tech would grow in terms of healthcare. So I would say tech and healthcare. So imagine, like, you think after this whole pandemic and crisis, these countries are going to let this happen again? Most likely not. And how? How's that going to happen? By growing their healthcare, by looking into how we're going to mitigate this from happening again. So this is one reason I would say try to invest in companies like UNH, companies that are known in healthcare and are going to actually grow in terms of, like, how do I say it? Like, they're going to be innovative in the future. They're going to be innovative and come up with new vaccines and stuff that they make sure that this doesn't happen again. So these are the companies that are going to grow in long term. Okay. Um, so again, what are the companies that are growing? What are the companies that are affecting you? And are those companies are actually good in fundamentals? Are they actually making money? I mean, are they making money? If they're not making money, How do you expect them to make you money? So for example, like we talked about Apple, what is Apple actually making money? Or is their cash flow increasing? Is their earnings per share increasing? Or they haven't been changed, like they haven't changed in a while? Are they actually innovative? Have they come up with new things? These should be questions that you're going to have. And then what happens right now is doesn't matter as much of what's going to happen in the future. That's why I say healthcare is important, because you have to think about, you have to open your mind. Okay, forget about making money tomorrow. If you're an investor, you don't care about what happens tomorrow. You're looking into a year, 2 years, 5 years from now, and you want to put your money somewhere that's safe. Okay, you don't want to wake up every day and worry about what happened in your portfolio. So do you see them growing in the future? Then that's why you go and read into their balance sheet. You read their financial statements. You look at their earnings per share in the past 5 years, and then come up with 5 or 6 stocks. You don't need to make. I see some investors putting their money into 20 stocks. Find 5 or 6 stocks. Now, Ben talked about tech industry. So I mean, this is what everybody knows, but diversification is a big thing. I mean, if you're an investor, you don't want to put your money all in tech. You don't want to put your money all in healthcare. You don't want to put your money all in energy. Why? So let's say there is gonna be a tech crisis, the dot-com bubble. There's gonna be I don't know, an oil crisis. If you put your money all in oil stock, or you put it in all Chevron and Exxon and WTI and all these ETFs and stocks that relate to oil and energy, you would have been crushed. You would have just thrown your money out. So you want to be diversified. So what is diversification? Diversification means that you put in your money in different sectors and industries. Why? Because usually what happens to one industry happens to the whole entire industry, the entire stocks of those industry. So if there is a crisis, for example, in financials, like right now, the financials, all the banks are screwed. So you want to put your money into financials in the long term? Would you invest in Bank of America in the long term? Do you think Bank of America is going to be good in the next 5 years? You have to think about those. Where do you want to put your money in? Is coronavirus, is this pandemic, all these companies being closed for this whole time, for this quarter, all of them losing employees just because they can't pay them, or they can pay them, but they don't want to lose money. All the companies trying to airlines are not only they're not making money, but they have to get loan. They have to get loan from government to be able to run still. Now you want to say, okay, for example, Boeing is gonna in the future is gonna start um, making money, right? So Boeing is one of the only companies that they make airplanes. But are you comfortable putting your money in Boeing right now? Just because, I mean, why do you think Warren Buffett pulled out of all the airlines? You have to ask yourself that. One of the best investors in the world. Why? The question is why. Your answer should be, his answer was because he's not comfortable putting in his money in a company that has to borrow money from the government to be able to run. If you cannot run yourself and you have to borrow money, how do you expect them to make you money? So you have to go through different things and ask yourself, is that company going to make me money? Again, the ultimate goal is making you money. You have to like the company, yes. Do you like Boeing? I love Boeing. I mean, we have Airbus and Boeing. Those are the only companies that actually make airplanes. And of course we're not gonna go run out of airplanes. We have to fly from places to places. But you have to ask yourself, is that company going to survive? And if it's going to survive, is it gonna grow? Okay? And after you look into the fundamentals, then you make a list of the stocks, find five to six, whatever, and make sure you're diversified. Make sure you're in different sectors, because if one industry gets screwed, the other companies are saving you your portfolio. So let's say oil is coming down, you have money in oil, but tech is rising. Tech is not affected by this coronavirus. Companies like Amazon, that they never closed. They never closed. Amazon never closed. Shopify helps other companies. You want to put your money in companies that are innovative, that they're growing, like Work, like Team, like Slack. And
Ali, I
yes.
want to add one point. So, like somebody posted like about like pharma companies. So, like pharma companies, like for example, coronavirus pandemic, right?
Mhm.
They're like one drug companies. So that can be binary event. Every time if a pharma company is relying on only one drug or two drugs, it's a binary event. And then they need to go all the way to the end. So you just don't know the outcome.
No,
Do you,
no, I'm not talking about pharmaceutical companies. I said healthcare. Healthcare and pharmaceutical is two different things.
no, not you. Somebody posted in the chat.
Oh, okay, gotcha. Yeah. Yeah, I
So
personally never, ever would put my
you
money into
just need to be
pharmaceutical. Never.
careful. You just need to be like, okay, do I want to risk my like whatever the dollars? Like if I go to zero, is that okay? Then you're free to go.
Right. Right. Yeah, yeah, exactly. That's it. All comes down to what you think. Again, somebody's saying Amazon fire people. Yes, they say fire people. But ask yourself, does that matter? Yes. I mean, you want to have feelings for people. Okay, yes, matters. But in reality, is that doesn't matter. If a lot of companies fire people every single day. TJ Maxx fires people every day. Alibaba fires people every day for different reasons. But do you think Amazon is gonna slow down? Did Amazon slow down during this pandemic? Did you see? Have you looked at the Amazon's chart? Forget the fundamentals. Have you looked at the Amazon's chart? Now you want to say Fed is pumping. Okay, Fed is pumping. Okay, Fed is trying to save the economy. That's why the Fed is pumping. But the reality is, yes, Amazon firing people for different reasons. You can read into the reasons, but the reality is Amazon. The question is Amazon growing or not? Don't get emotional about different things. Don't read like the news is gonna just push you away. How many of you have? That's including myself. How many of you missed this rally up just because of your emotions? How many of you lost a lot of money in this rally because of your emotions? Forget your emotions. Again, we're talking about fundamentals. Fundamentals is a totally different thing. We're not talking about technicals. We're talking about fundamentals. And if we're talking, and again, if now let's say you see this market crashing, okay, you don't like the fundamentals of the economy right now. You're scared that the company is going to hell, right? Some it, why the hell market is going out? So you you think the this economy, the fundamentals of the economy is not good, then you're reading into fundamentals of the economy and you see us going to recession and you don't see this is the end, then you shouldn't put your money into the market right now. Again, so you have to be comfortable with the fundamentals, okay? And we're not talking about technicals. So but at the same time you have to ask yourself something. You have to be like, all right, so let's say we do make another we this is like 2008, okay? This is like 2007, 2008, where market rallied, Fed pumped, and we took another leg down and we went right back down. So your question should be this: is the company that I'm investing right now is a company that is going to survive another breakdown? Okay, that should be your question. If I'm putting my money in, I don't know, if I put my money, so for example, look at the healthcares. Even though we pulled down, the healthcares went back up. The tech, look at Nasdaq. Nasdaq recovered more than like faster than any other, faster than Russell, faster than S&P. So you want to ask yourself, is it, again, is the fundamentals on my side? If you invested in companies, in tech companies, in Nasdaq companies, this wouldn't have affect you at all. I mean, most Nasdaq companies are back to their all-time highs. Look at Facebook. Facebook is like 20 bucks away from its all-time highs. So you want to ask yourself, am I investing in a company that is gonna save me? Is it, I'll be okay if we see another leg down? Am I gonna lose money, or they're gonna recover right away again? And you want to be diversified again, and don't put your money in companies that are gonna be screwed if we see an inflation or a recession or whatever. And just look into future. Fundamentals is everything, man. That's why there's only a list of stocks that I look into and I trade, because when I'm trading, yes, I'm looking to hold my position not more than a week, because again, I'm a swing trader, but I also want to be comfortable. Even if it's not going my way, I'm not losing a ton of money. You know, I trade stocks, I trade options, I trade futures. But when I'm holding something, I don't want to hold, I don't know, Clorox. I don't want to hold, like, I don't know, APT or INO. I don't want to hold crude oil overnight. I don't know what happens. So trade, even if you're a trader, trade names that you're comfortable trading them. Don't try to chase different things because they're popping. But again, we have different traders. You have a scalper or whatever, so that's a different story. But if you're looking into investment, look at the fundamentals. And if anybody is interested in all this, you can write it down, or I can send you this file. It's all up to you. But if you have any questions, I'm gonna unmute everybody, and then you can ask your questions, and then we can go over a few technicals that you guys wanted, like the volume profile, whatever you like. So
And then one more thing, and then he's expressing his own views. It doesn't mean like, yeah, he's not like, giving it his own views. Everyone has their own views, and then they can.
Right. Yeah. So none of us in here are financial advisor or claiming to be professionals. The
exactly.
purpose of this conference is to share our opinion and collaborate. So if you have any questions or ideas, feel free to let us know. And this is also our first official meeting. If you wish to share, just do let us know, and we're all here to help each other.
Yep. So if anybody has questions, somebody's asking, please share stock scanner. So again, I can type in here. We have the Finviz. You can look. It's a free. Can you see this screen right now? This one I just opened here. The Finviz.
Yeah, I can see it.
Yeah. So we have the. You can actually go to Finviz. You go to the screener tab, and when you go to the screener, look into descriptive. You can choose what country stocks you're looking at. I said I look into United States companies. You can choose the market cap if you do, like, for example, mid cap. So you do 2 billion to 10 billion mid caps, and then you go into fundamentals. You put in the metrics that I told you. So you put in return on equity. You do over 10%, return on investment over 10%, return on asset 5%. You put the PMS, you put the PMP. You look at the next 5 year results here, EPS on the next 5 year, and then you get a list of the stocks. Okay, so based on the things that I just put in,
Ali,
yes.
sorry to bother. Can you mute everyone while you talk so that other people can hear as well?
Mhm.
Thank you.
No problem. So yeah, so this is one of the screeners you can look at on Finviz. This is free. Then if you're an actual, like, if you're serious about investing, then I would say put a little bit of money into a good scanner that actually helps you to find a good, also an entry into a stock. So I personally really like VectorVest or MarketSmith. Market Smith is newer. Victor Smith is been here for a very long time. Both of them are great. Victor Vest and Market Smith both also use technicals to find you a good entry too. So both of them are great. But yeah, so you can put some money to look into that, and then after you put in your metrics, then you can look into technicals and like find out like, okay, um, these are the names that I like. Now I'm looking into technicals and I want to see like, like what technicals do I want to look into to find the right entry. Again, these are not companies that I'm looking at. These you have other stuff that you have to other metrics like the earnings per share, cash flow, and other stuff that you have to put in, and you're not gonna get a lot of names. But so I'm gonna unmute people now.
Oh, I don't know when.
So any questions, guys? Before we jump into technical. Anybody? You're unmuted, so if you have a question, you can ask.
I think Ali, it's better to be muted and then they post the question in the chat.
Wait, what happened?
Post the question in the chat.
I think it's better if you just mute everyone, and then if they have any questions, they can just answer
Type it in.
through the chat.
All right.
Yeah, yeah. If you could do that, because I'm actually at work, so
Oh, okay. Cool,
I don't want to make noise. All right, thanks.
All right. So if you have a question, just type it in and I'll answer. So somebody's saying about the TO scanner. So TO, yeah, the Thinkorswim has also a scanner, but it's not the best scanner ever. So the scanner on Thinkorswim, the fundamentals is not one of the best scanners you can find. I personally don't like it. It's a little bit also confusing for a lot of people. We will go over volume profile, so don't worry about that right now. But ask if you have any questions about the fundamentals before we jump into technicals. What should be the time frame of long-term investment, and should we square off positions when we are 100%? What do you mean if we square off the position? I don't understand what that means. But your first question, what is the time so the time frame? The time frame that you want to look into is again based on how long do you want to hold the company, how long do you want to hold the stock. But that has to be at least like you have to look into a monthly chart. I mean, if you're talking about investment, that means a year plus, right? So you look into a monthly chart to find the best entry on that. Yeah. But I don't know what your second question means. We square off the position when we are 100%. How much returns we can expect? Oh, that's the, again, you do rate of equity, rate of investment, and rate of asset, and that's why you do this scanner. So you want at least 10% return on your equity, you know. So that's at least 10%, yeah, per year. 10% per year. That's the minimum that you're looking into. Is there a big difference between Market Smith versus VectorVest, or they are very similar? Market Smith and VectorVest are very similar. Now they have different things in technicals. VectorVest, I believe, was made for a long-term trader than an investor. I use VectorVest for longer than Market Smith. I'm newer to Market Smith, but VectorVest I use it for a longer time, and the person who made it, this guy is actually is worked for I think he was a hedge fund manager, and so he was a very smart guy, and but he was more of a trader than investor. So if I would say look into Market Smith since it's a newer thing. Victor is very cool, but I like Market Smith scanner much more. So yeah, I would say Market Smith for now. Have to leave early for my daughter's Zoom play date. Okay. So if any of you guys have any other question, you can type it in. I'll answer. If not, then we'll jump into somebody's saying dark pool support resistance. So we'll jump into volume profile, and then we will get into dark pool. So what is dark pool? How to identify the trend of a stock and identify when trend change. Again, that's a technical question, so we will go over that. But if any more fundamentals, then we'll jump into that. And if any of you want this file that I put in the metrics, you just let me know in Discord. I'll just send you this file. Would you use P ratio at all? Also in college, they would teach us DCFs. Is that necessary for life? DCF, I wouldn't say it's important, but the P ratio, yeah, for sure. P ratio is important. Um, but I don't know if I added it in here. Yeah, I didn't add the P ratio. I have the PG ratio of less than 1, but yeah, you can look into that too. Is this the right time for long-term investment? That's totally, that question is just totally subjective. That's up to you. If you're not comfortable with the fundamentals of the economy, that's a different thing. If you're saying some correction, again, correction doesn't mean a crash. So we might get another correction, and that if we do get a correction, that should be a plus for an investor. I mean, I bet you. I don't know if you watched Warren Buffett talking, but he said he missed the whole rally. He said he was scared to put his money because he was scared of that correction. But now, any correction that you get, that should be a gift for you to put in your money. Because right now we've pushed so much that it feels like if you start to invest now, it's kind of risky. But any pullback in the market, that should be a gift for you to start putting your money in it. I mean, personally, every pullback in the market right now, every pullback on this rally that we did, I put in more money into the market. Every pullback, I bought again. So every small pullback you get, that should be your gift. And if we get a large pullback, that's even better. Again, if you're an investor, you are looking for the pullback. Don't look into losing money today. You might lose money today, you're looking into, are you making money in the next 5 years? Are you gonna be like a step ahead from everybody else? Let's say from 5 years from now, I don't know, Apple is like $600, and then your entry was $300. Meanwhile, everybody else got in at like 500. So we have people like me and you that are looking to get into the market in a pullback, and we have people that were scared to put in their money, and then now they're going to be bag holders later on after market actually does crash again, and we get another bear market in the next 5 years, and they are the people that put in their money when Apple was 400 $500, and now they have to hold all those fear of losing money. But remember, again, as Ben said, these are not advisements. I'm not telling you to put your money in the market. Our thoughts are different. The way we think about the fundamentals of the company, fundamentals of the economy is totally different. But again, put your money in a company. If you're trying to invest right now, put your money in a company that even if we do get a correction, if we do get another breakdown, those companies won't be affected, just like they weren't affected this time. Okay, look at the companies and see, every time this S&P is coming down, what are those companies that are still going up? They don't care. You've seen what happened to Shopify. You saw what happened to Team. You saw what happened to Amazon. So look at the companies and see, are they actually moving with the market? Are they moving with the whole pandemic or not? So what about the new headlines are significant? If so, are there some key terms to look at? Okay, again, if you're an investor, bad news in the economy, the headlines, shouldn't matter. It shouldn't matter. Why? Because you're looking to 5 years from now. If we have coronavirus right now, are we gonna be in the coronavirus pandemic in the next 5 years? For the next 5 years, are we gonna be in a pandemic every single year? So headlines, a lot of news happen. You have to think about this. A lot of news happen just to pull investors out of the company, out of the stocks, and they pull the traders out of the stocks. So the hedge funds buy the companies back up. So bad news is usually good news. You've seen that happen. You've seen that happen over and over and over again, and you still wanna hold your feelings. You've seen this economy move with bad news, man. The Fed pump through banks has caused inflation in the market, which is why stock prices are rising. Unless the apocalypse happens, don't expect a large and quick correction again. Yeah, and we have different thoughts about the Fed pump and things. So those are myth. Yes, Fed is pumping, even though Fed is not allowed to involve. This is the first time that this happens. That looks like Fed is actually buying assets, which legally Fed is not allowed to, which is pretty interesting. But we are seeing this, and somebody's mentioning LK, Lunken Coffee, and that's a very good example. If you were smart, you wouldn't have put your money in a company, in a Chinese company, that they had so many sketchy fraud. And actually, again, if you're investing in a company, remember, you have to read into the company, like, and every balance sheet, everything. And somebody posted about their balance sheet that and there was so many sketchy things into it. So remember, invest in companies that you can trust. Okay. Any other question? What is the best time to enter for long-term investment? Buy low. When to look for buy low? Okay, buy low means buy in a correction. So every pullback in the market. So again, don't look at the daily chart if you're trying to get an entry. Look at the monthly chart. Look at the weekly chart. When you see a pullback in the market, you see a red month. You see a whole month is red, or you see a whole week is red. Start putting in your money, and don't put in all your money into one company. Again, be diversified, and don't put in all your money at once. So every pullback, add into it, average down. You're not averaging down in a random company. You're averaging down in a company that you know the fundamentals are strong, that you know they're gonna grow anyways. So averaging down, they say don't average down in a losing trade, but you are averaging down in a company that you are confident that they're gonna be growing.
And
So
don't
any
forget to
pullback
check.
is,
Sorry, and don't forget to check if they pay dividends as well. That's another
if they
part.
what?
If they pay dividends.
Oh yeah, for sure. I definitely I'm pretty sure. Yeah, I put it in here. So the dividend is definitely important. It's like an extra paycheck for you every month. So yeah, for sure. Any other question? And then we can jump into a few technicals, and then I'm sure Ben is very good with technicals too, so maybe he can add stuff. So if no more questions, I'll just bring this TOS file. All right, here.